Starbucks is all over the place right now, guys. One day it's down 4%, the next day it's back up 4%, and right now it's on everybody's watch list. Many investors, including myself, are swooping up Starbucks, and today we're going to talk about what the heck is going on with this stock and whether or not it's worth adding to your portfolio. So without further ado, let's get into it. All right, my friends, welcome back to another video. It's great to see you guys. My name is Ryan Williams, and for those of you who are new to this channel, here I am documenting my investing journey with dividend stocks, and on this channel, I show you how to easily create passive income by buying and holding dividend stocks like Starbucks over a long period of time. This week, I actually added some more Starbucks to my portfolio, and as you can see, I picked up about half a share by investing $50 into Starbucks, and then I also invested $50 into Snap-on this week and got about a quarter of a share of that, and then another $50 into Intel and got just over one share of Intel. And that brings my total contributions for the week to $150, which is the amount that I invest into this portfolio every single week. As you guys can see at the top of the screen there, this portfolio is currently valued at just over $35,000, $35,100. And then going over to the gain and loss page, we can see that I'm up overall nearly 7% in this portfolio, a total gain of $2,254. And then as far as this portfolio's annual dividend income that it's bringing in for me, guys, in 2022, I'm anticipated to bring in, at this point, just over $1,650. However, this number will continue to go up as we make our way throughout the rest of the year as I contribute more to this portfolio. And as I mentioned just a moment ago, every single week I'm investing $150 into this bad boy right here. So who knows, guys, by the end of the year, we could be up over $1,800 or even $2,000. My goal is to be over $2,000 by the end of September. So we have a little bit of work to do. Now, going back over to this gain and loss page, I want to talk about my Starbucks position real quick. So as you guys can see, it's right there in the middle of the screen. I have 22.3 shares of Starbucks at an average cost per share of $96.62. And my position so far is down about 9.5%. But as far as this week goes, it's actually jumped up quite a bit. And going over here to Seeking Alpha, we're going to take a look at this company's share price performance. Now, in the last year, it's really not performed that well, down 20% in the last year. In the last 6 months, it's a very similar story, down 22.77%. And I think year to date, it's down about 24%, somewhere in there. And then just in the last month, guys, in the last 30 days, it's down another 6.5%, which is a pretty big drop. But looking at that share price chart right there, you can see it actually has come back up. And just this week, in the last 5 days, it's jumped up nearly 9%. So this week, Starbucks saw a really big gain, bringing its share price from a low of about $79 there, which was so nice. So nice to see Starbucks under 72, where it's at now, which is about $87.50 per share, which is still pretty low. Now, while this overall downward trend that we're seeing from Starbucks is a result of things like inflationary pressures and supply chain issues, and even closing down some stores in Russia, from what I've read, this week Starbucks saw some really great news that came out of their annual shareholder meeting, which is what brought the share price back up into the 80s and actually coming up closer to the 90s again. Now, first of all, Starbucks announced that their CEO of 13 years, Kevin Johnson, is stepping down and will be replaced by former CEO and Starbucks legend Howard Schultz, who is leading Starbucks for now the third time, I think, at least on an interim basis until they can appoint a new CEO. Now, they also highlighted some pretty big expansion plans to reach 55,000 stores by the year 2030, which would make them the world's largest restaurant chain, bypassing others like McDonald's, Subway, and KFC. That's some pretty big news. And then one last thing worth mentioning coming out of the shareholder meeting is the share buyback announcement. So Starbucks announced that they will be reinstating their share buyback program, and over the next 3 years have committed to return $20 billion with a B dollars to shareholders, probably both in the form of buybacks and dividends, if I had to guess, which is fantastic news for us shareholders and really could indicate that we're in for some more dividend growth. And real quick, guys, before we continue on with Starbucks, I want to take a quick moment and invite you all to join the Dividenders Discord group. Now, essentially what this is just one big group chat filled with over 450 other dividend investors and counting. And what we're doing in here is just talking dividend stocks and sharing our portfolios, passing along stock research and investing experience, and overall just offering support to one another on this journey to financial freedom. To gain access to this Discord group, guys, it's totally free. All you need to do is click the link in the description of this video. It will take you right there. Now, definitely check it out. I can't wait to see you guys in there. Now, getting back to Starbucks, aside from the fact that I'm a frequent Starbucks customer, I even, keep the beans at home. I got them in my mug right here, guys, as I always do. One of the biggest reasons that I'm investing in this company is because of their dividend stats, and going over to the dividend scorecard page right here and talking talking about some of those stats, the thing that I like most about Starbucks' dividend is their 5-year growth rate, which you can see right there is touching nearly 16%. Extremely high. Love that dividend growth. And they have a somewhat average dividend yield, 2.24%. But with time, by buying in today with such a high dividend growth, that dividend yield or the yield on cost will really go up as the years go on if they maintain this growth. And the payout ratio is really not too shabby either, 56%. It's below that 60% mark. So they're paying out half of their free cash flow to the dividend, keeping half to reinvest back into the business. That seems pretty fair to me. And then they have a fairly respectable dividend growth history of 11 consecutive years. And I got to say, overall, I'm really happy with these dividend stats. And it's actually pretty crazy to see if you were to invest in Starbucks today and just keep swooping up shares, keep chipping away at it, $100 per week for the next 20 years or so, you would have a really solid position. After 20 years, you'd have about $270,000 invested into Starbucks and would be generating almost $11,000 just from this dividend stock. Now, as we mentioned, the yield isn't that high, but what will get you to that level of dividend income is that dividend growth. It really is going to compound quicker over time just because they're increasing it so much year over year, which is pretty awesome, I think, but it's also important to remember at the end of the day, no stock is perfect. And one thing that I'm still kind of on the fence about regarding this company is their valuation. And if we scroll up and go over here, we'll take a look at some of these valuation metrics. And starting with the PE ratio right here, which is 26.24, it's pretty dang high. Almost 100% higher than the sector median PE ratio, but nearly 25% lower than this company's 5-year average PE ratio. So, kind of some good, kind of some bad there. And scrolling down, they don't have a price to book measured, so we'll skip that. Getting into the price to cash flow, 19.66. This in its own right is also pretty high. And it's also nearly 80% higher than the sector median price to cash flow. But just like what we saw with the PE ratio, it's nearly 13.5% lower than the company's 5-year average price to cash flow. And what this tells me, guys, overall is that Starbucks is pretty expensive compared to some of the other companies that are within this sector, but is considerably cheaper than it historically has been, at least in the last 5 years. To me, this means you can probably find a better discount within the consumer discretionary sector right now. Like, for example, if you were to look at stocks like Dick's Sporting Goods or Whirlpool, Best Buy, Williams-Sonoma, or even VF Corporation, those look to be considerably cheaper than Starbucks is right now, and they're in the same sector. But if you're specifically looking to buy Starbucks, now is not a terrible time to do so. I also do think, though, it's still a bit above its actual fair value, so that is definitely something you're going to want to take into account when doing your research into this company. When running a discounted cash flow calculation to find the fair value of Starbucks, I came up with a share price of $79.39, which you can see right here. It's about 8.6% lower than this company's current share price, which means to me that based on the company's expected future cash flows, the stock is presently overvalued. So that's not great. It's a little bit higher than where we'd like it to be. However, this is with an 8% required rate of return. If we were to be a little bit more flexible in our calculation and bring this down just a hair to like 7.5%, we would get a different story. And here Starbucks would be just slightly undervalued with a fair share price of $88.52 per share, which is right about where it's at right now. Now, while these calculations are helpful when trying to come up with an ideal share price to buy in at, take it with a grain of salt, guys, because truthfully, this is just my calculation and it could be completely different from what someone else comes up with. Everyone does this a little bit differently. Also, guys, there are so many other variables to consider when investing in this company besides the discounted cash flow calculation. It's just one thing to keep in mind and one thing to look at when you're doing your research into these companies. Now, whether or not you should add Starbucks to your portfolio right now, that's a really great question. I mean, personally, guys, I'm still buying this stock because it's so much lower than my average cost per share because I'm down like 9%. I have a really great opportunity to lower my cost basis. So I'm going to continue doing that while my position is in the red, really take advantage of these low prices, at least, relative to my own position. But if you're looking to open up a new position into this company, I think that's a little bit of a different story. And that's where these discounted cash flow calculations can really come in handy. I mean, if you want a higher margin of safety, then this stock may technically be a little bit overvalued. But if you're okay with a potentially lower return in the future, guys, then, today might not be a bad time to buy Starbucks, especially while it's under, $100 or even under $90 per share. So that's my take on Starbucks, guys. And if you have a hankering for more dividend stock content, then check out this video right up over here. And if you'd like to keep in touch and see more videos from me in the future, then hit that subscribe button right here. So at any rate, thank you guys so much for watching this video. I really appreciate it. Hope you all have a great day, and I will see you in the next one.